Brace yourself, because interest rate rise is coming. With this motto, I'm going to start today with this week's market update. My name is Peter, and on this channel I will provide you with everything I look into, particularly when navigating the stock markets, macroeconomics, and the crypto markets in particular. It has been an exciting week again. The Federal Reserve made a lot of trouble again. The markets reacted immediately. Crypto markets are also, they are actually bleeding, I think. We talked about it like a few weeks ago already, where I said the people are fearful, but that's not blood in the streets. Now we are getting closer. We got a little relief, but I think the main issue is not off the tables. We are still waiting for what is the Federal Reserve going to do in the next few weeks and month. I think that's what we have to look in particular. And with that, we are going to start into this week's update. As I already said, the Fed shocked the markets. They announced that they probably, and I think that's important to stress, they said that they probably are going to hike the rates faster, more aggressive. And the response of the markets was pretty immediately. After the announcement, you can see that here, the S&P index dropped really sharply. There was a huge sell-off generally in the markets. Here also on tech and the more conservative also S&P 500, but also mainly tech. For example, Alphabet, Tesla, growth stocks, they sold off sharply. On the other side of this market, we see the bond. They have also turned sharply. The interest rates are probably going to be raised more dramatically. In consequence, bond yields were rising. There was a sharp increase, now going slowly like in the direction. I think there's an updated slide on the others as well. We are like above or around the 1.8% level now. Many people obviously in the markets did not expect this kind of announcement, this kind of response. Today I'm going to update you on that. We are waiting for the inflation numbers, which are going to be announced in the next few hours probably. I will going to update you on my Instagram channel. Definitely check that up. Generally, it has been one of the worst start-offs of a year. In particular, also looking at the crypto market, I will shortly go into that as well. But what we see is that, for example, the Nasdaq, which is like, very full of tech stocks, has been declining over the past few days. ARK is doing actually very bad. And now is like a little bit of the time to, investors are very uncertain what or how to act, how to allocate their assets and how to allocate their portfolio in these kind of very different times compared to the last few years, where we had moderate inflation rates on the CPI, of course, and very, very low interest rates. So now the people are looking forward what is going to happen to the markets. So this is a time to rather risk off, because many people say it's we go now from 0.25% to 0.5%. That's still historically low, but you have to always see this in correlation, because that's a 2% hike actually. So that means like when that your cost of capital was in the first year or in the years before, it was around, I don't know, like 10 million. Afterwards, it's going to be 20 million. So that's like, you have to look at this in particular in relative terms. Also, like we see that here on the left side, there are huge hikes in rates on the 2-year treasury, like the short-term treasuries, 10-year treasuries. They are here on a very crucial point, to be honest. I think it depends, of course, on what the Federal Reserve is going to announce in the next few days, how they will actually conduct this tapering. Very interesting. I got some insights lately from a high net worth individual. It's an investor, also good known, and he told me about like a theory which is like very, some people in this kind of like areas where he's acting, hedge fund managers, investors, private equity investors, they say that there's this theory that the Federal Reserve is only going to, pretend that they are going to sharply increase the rates to prepare the market rather. But there's the theory that after this principle of self-fulfilling prophecy, when the market is going to price in these kind of actions already now, maybe there is later for example, for 3 to 6 month period, not actually the necessity to pull the brakes in that way that they have to really sharply increase the rates. This is just for you to think. Nevertheless, still we had the worst startup, or one of the worst startups. We are. I think that's actually a luxury problem, because like when we look here on the 3-year performance, 5-year performance, and also generally here since the great financial crisis, 3-year performance 80%, 5-year performance around 100%. That's actually crazy, to be honest. Normally this is kind of like the normal, what you would expect on the compounding terms over 10 years is what you say, like with 7 to 8% is what we historically expect from the stock markets. But this brought it to another level. 100% in 5 years is actually double that, or in a double speed, what is normally known in this asset class. So pretty crazy times, to be honest. There are some very good returns. But this is also a reason, I think, to be worried or to be more conservative. Not getting into this kind of euphoria, oh my god, then last few years are going to be the next few years. And I mean, this has been one of the best performing years ever, or actually since a very long time. I think I had it here on the last slide. It was 1970 years, in the 1970s. And when we look at other cycles of boom and bust, then we also see that there is some very concerning similarities between, for example, in this case, the dot-com bubble and the performance what we can see today. But that's only when you just like put the performances over another. It looks very similar, but the reasons are very different, because in the 2000 bubble we had it was mainly driven by earnings per share. So that means like the company's revenues, it was all flourishing and everybody was in euphoric. But here we have like very, very different times compared to what was 20 years ago. There's a totally different environment from the macro perspective, because these kind of levels, what we're reaching now, is mainly driven because of the low interest rate, the money supply, central banks all over the world supplying the market with liquidity, and this obviously results in this kind of stock valuations. So how to allocate your capital in these times? Also an interesting insight from the investor I talked before about. He said that many of his friends, many of his business colleagues, they are rather going now into value. And we have also seen, generally when you look at it, we have seen one of the biggest inflows into value stocks of, for example, hedge funds since 4 years. So there's this kind of trend going rather from growth now into value. So there's something what you should definitely look into closer, particular. This is also mainly for the reason because when we have still this kind of high inflation, we don't know whether the Federal Reserve is going to take control over the inflation in the short to midterm. So what they are looking, and what I am looking also here in particular, is on value stocks that have a higher reserve on liquidity on the balance sheet. Which have like a lot of cash on their balance sheet, because that's point one, for the reason that in case there are sharp increases in the interest rates, that some companies are going to have a lot of struggle, very bad times, to refinance themselves on the open markets. Maybe they can't afford the interest rates which are going to come probably. So I'm looking for this kind of stocks that have a lot of liquidity, so they can rather like operate autonomously without getting too much into credit. And second point is that I'm looking for stocks, for example, that have the opportunity, or that can give forward the upcoming inflation to their consumers, so that they are not bleeding themselves or suffering these kind of inflation rates. Now looking into crypto markets, from the last time I told you that I'm not that trustful right now into what is going to happen there. As I told you, it's a time to risk off. This is also what the big investors, hedge fund managers know, the companies know. They are more stepping back because, crypto, there is no, the price discovery is not already fulfilled. So that means it is a speculative asset. You have to know that. But nevertheless, I think that we are now in this area where we say we should not drop under 40K, but I'm also not super pessimistic about these markets. I think we are actually very, right now at this kind of levels where I think investors and crypto holders are pricing in what is around the market, what is happening on the macro perspective. And I think that, for example, when you are not right now in the market, it is a good time. I still know that there are a lot of people out there, they screaming around like Bitcoin is on discount, buy now, it's only going up. You don't know. That's totally rubbish. I think that when you are right now overexposed in crypto, sure, that's your own risk. And when you think you have some insights into the market, then sure, go for it. Other than that, I think that when you are right now overexposed, and on the macro perspective, we don't know what the Federal Reserve is going to do. We don't know what the other markets are going to do. I don't think that crypto is going for a, independent run here. But nevertheless, I think when you are not in the market yet, it might be a good time to get some exposure for sure. But you still have to look at it over a longer time. Nothing for a short-term gamble, I would say. Altcoins. The index is not really saying anything rather than we don't know where we are going. I think that's the general sentiment in the market. People are not very confident about where it is going. We had a short-term relief. We are now above, I think, 43, 42, around these areas. We had a sharp wick under the 40, but it was bought up with a high volume. That was what I was looking on in particular. That was a good sign. Now we are slowly climbing up into the 42, 45 areas. This is a short-term relief, I would say. And this is also good for altcoins in particular, because this kind of like boring price action around these areas, nothing too bullish, nothing too bearish. I think that's the time where you have to look into altcoins. They had a sharp sell-off though as well, but when you in particular are looking right now in some specific altcoin projects where you have where you believe in on the long term, and it's right now trading sharply below the all-time high, then this might be a good opportunity for you to get into this project for cheaper now. Yeah, that's just a recommendation for you. Sentiment, we had it again. We are still in the area of extreme fear, according to the Fear and Greed Index. But this is also like Fear and Greed, you have to know that that's an index which represents the general social media sentiments, and they think that's always representative for the whole crypto market, but you have to know that on social media they're only like they have a high influence, these like probably like 5%, which are controlling the sentiment in the market. There's some big influencers when they are rather posting bullish signs where they give a lot of hopium, then of course Fear and Greed shifts to the positive side. On the other hand, when these only like 5, maybe like also less 2% are rather posting bearish signs, then this also shifts to the downside. Overall, I would say these are actually very good signs, because as I mentioned it already quite a few times, there was too much hopium for me, particular in the markets. When we look at Q4 last year, people were overly bullish without any fundamentally sufficient reason. I know many people say that it was because of the spot or the future ETF, which was approved. But generally, I think that this future ETF did not have, or does not have, and will not ever have this kind of impact on the crypto scene in generally. because nothing really has changed there. Other, like, total opposite would be when we have a spot ETF. I think that would be overly bullish for Bitcoin and the whole industry, because then other actors in the market would get this access to this market. For example, healthcare and insurance markets, and there is where the big money is in. And before that, there are not a lot of signs where we can say this would be overly bullish for the whole market. Of course, when there is a company stepping in, which are like for example, a Fortune 500 company, when they are going in, that would be a very positive sign. This could be like a catalyst for another run-up. Other than that, I think the markets are very neutral. I think they are very well priced right now. And what I expect maybe would be like a reasonable increase in price over the next few weeks and months, and yeah, just a healthy increase in price, maybe going to start to attack all-time highs. Maybe that's around March, or I would rather say end of Q1, and maybe I think that's a pretty realistic aim to do, or a goal to go for, to say that it would be a reasonable price for Bitcoin in this kind of environment, when we say there is not too much increase in rates. I think that's something to watch out, and that the inflation numbers are not going to worsen. And then we can say on the long term, maybe year end, something around 100k, a little bit like below, that would be like a very good sign for the whole industry as an acceptance. In the short term, we still see, I told you that last time, the illiquid and liquid supply. Illiquid supply, which is going from the exchanges, from the open supply to cold wallets, is still increasing, and it's actually sharply increasing. And this has been in the past a very reliable indicator of where price action is going. Obviously, this is a very positive sign for the whole market, and you can also see that here on the exchanges. Future long liquidations, they are in a very accelerated position right now. We have seen that this kind of levels have been reached just before we had this kind of pause into going the midsummer last year. That is definitely something to watch out. It has been the highest level since May, and we know what happened there. But other than that, I am on-chain very optimistic about the price action right now. And when in doubt, soup out. So when you're now sitting here, being very worried about your exposures in the crypto market, either you are overexposed in the market, or you don't know how to look at it. And when I say you don't know how to look at it, just now look at the yearly candles, and you see that 10 out of 12 have been actually green for Bitcoin. We have had the worst start in the crypto industry, or in the crypto market, since I think there was probably like 2011 was the last time the start in a new year has been that bad. But still, we have had green years most of the time, and I also think that in this year, the price should go in also in this kind of environment where we have higher rates than before this is still possible that we get in 2021 a good and profitable year on the crypto markets. And yeah, I think that's our bottom indicator, Peter Schiff. When you know the fundamentals, when you look at it rational on the market, you don't have to be relied on someone like Peter Schiff tweeting about or bad things, FUD around Bitcoin, and Bitcoin is dead. I think, as I remember it, he has actually tweeted about Bitcoin around in the 40s area. So when we now go up, this will also be added to my indicators where we reach a bottom or not. I think that's it for this week. I hope you did get some value out of it. I hope I could help you with some decisions. Stay tuned for more. If you like this content, please give me a hit on the like button. Subscribe for other updates. I will definitely be here next Wednesday again when we talk about stock markets, the markets in generally, and Bitcoin. And definitely look at my Instagram page as well. I will post there regularly updates. And till next week, I wish you all a good time and hopefully see you next week as well. Bye bye.